EJAP President, Mr. Gerald de la Peña, members of EJAP, my co-workers in government, and to everyone joining us online, good morning. It is my pleasure to be with you in today's virtual forum. In line with the theme of this year's Macroeconomic Forum, let me share some insights on the global and Philippine economic outlook for 2021. Some updates on the Philippines' economic performance and the BSP's policy actions to support the national government's whole-of-nation approach in addressing the current crisis. Let me begin with a quick overview of the global and regional growth prospects, which point to an improved but differentiated and diverging recoveries. The IMF's global growth projections improved to 6% for 2021 and 4.4% for 2022. Policy support and vaccines are expected to lend support to this expected economic recovery. The IMF also expects greater economic scarring, particularly among emerging and developing economies, due to the prevalence of small businesses and shallow capital markets. ASEAN 5 economies are seen to rebound in 2021, reflective of the projected broad-based recovery of Vietnam, Malaysia, the Philippines, Indonesia, and Thailand. Multilateral agencies expect the Philippine economy to expand by 4.5% to 6.9% this year. These are broadly in line with the national government's projection of 6 to 7% for 2021. Despite the challenges caused by the pandemic, the country also has a favorable medium-term growth prospects based on the stable outlook affirmed by the major credit rating agencies. The economy is able to register sustained improvements on a quarter-on-quarter basis from the 17% contraction recorded in the second quarter of 2020, the peak of the lockdown. The Philippine economy managed to post smaller declines in the succeeding quarters, with only negative 4.2% in Q1 2021. Without seasonality, the country has been posting positive quarter-on-quarter economic growth since the third quarter of 2020. This improvement is expected to continue in the succeeding quarters of 2021 with more massive rollout of the COVID-19 vaccines and a more strategic implementation of community restrictions. Business sentiments are up. Based on the latest Business Expectation Survey, business confidence for Q1 2021 improved, rising to 17.4% from 10.6% in Q4 2020. Business outlook on the economy is more optimistic for the next quarter at 42.8% and for the next 12 months at 60.5%, both higher than previous quarter survey results. The survey on consumer confidence in Q4 2020 indicates that consumer confidence for Q1 2021 likewise improved to 4.3% from negative 4.1% in the previous survey. And for the next 12 months, consumer sentiment remains optimistic. The inflation environment remains manageable. While inflation increased to 4.7% in February 2021, this slowed down to 4.5% in March, April, and May. The latest number is consistent with the BSP's assessment that the uptick in inflation in the first half of 2021 is transitory. This is based on supply-side pressures related to the African swine fever, weather-related disturbances, higher global oil prices, and positive base effects. Nevertheless, our latest inflation forecast indicate that average inflation is likely to settle at 3.9% in 2021 and 3% in 2022, both within the 2 to 4% target range. The improvement in 2021 is due to expected lower price pressures in food commodities owing to the improved weather conditions, the implementation of Executive Order numbers 128 and 133, and other non-monetary interventions to alleviate supply constraints. Risks to the inflation outlook appear to be broadly balanced, but the timely implementation of approved non-monetary measures could mitigate further supply-side pressure. In any event, analysts expect inflation to remain elevated in 2021, but to fall within the government's 2 to 4% target range in 2022. For this year, analysts expect that risk to the inflation outlook will remain tilted to the upside due to supply disruptions and rising global oil prices. The country's external position also continued to hold up well despite the deficit in the overall balance of payments in the first 4 months of the year. This was due largely to pick up in trade deficit as the economy recovers. The BOP position reflects an increase in the gross international reserves to $107.7 billion as of end April 2021. This level is equivalent to a year's worth of import cover. The received doctrine is that 3 months' worth of import cover is sufficient. GIR is also 7.4 times the country's short-term external debt on original maturity. We also have ample fiscal space to tap further international financing as needed. The country's external debt to GDP ratio increased to 27.2% in end 2020, mainly due to pandemic-related financing needs of the national government. However, this remains at prudent level. In addition, a large part of the country's external debt has medium and long-term maturity profile, which supports a manageable debt repayment schedule. Moreover, a majority of these foreign borrowings carry fixed interest rates, rendering them not susceptible to global interest rates volatilities or foreign exchange fluctuations. Cash remittances from overseas Filipino workers has been resilient and continues to be strong. For the first 3 months of 2021, cash remittances amounted to $7.6 billion. This is an increase of 2.6% faster than the 1.4% that was posted in the same period last year. Meanwhile, BPO services in 2020 remained strong despite the disruption to business activities all over the world. In 2020, BPO earnings totaled $22.4 billion, only 1.6% lower than the $22.7 billion in 2019. Philippine peso remained one of the strongest currencies in the region. This reflects in part the adequate level of the country's international reserves and improving market sentiment. Finally, the banking system is strong and sound. This is one of the reasons why the rating agencies have continued to affirm a stable outlook for the economy. Notwithstanding the various operational and market challenges encountered during the pandemic, the banking industry remains strong and financially healthy. It continues to be an efficient and responsible intermediator of funds. The bank's capital adequacy ratio of 16.6% on solo basis and 17.1% on consolidated basis as of end December 2020 are above both standards set by the BSP and the Bank for International Settlement. Meanwhile, the rise in bad debts also remains manageable. Non-performing loans and non-performing assets ratios were modest at 3.9% and 2.5% respectively as of end April 2021, compared to the double-digit levels recorded during the Asian financial crisis. Thus, given these factors, and barring yet unforeseen growth speed bumps, the Philippines has the essential elements to rebound this year. However, admittedly, there is still a high level of uncertainty, both domestic and abroad. The government has to be more strategic in addressing possible resurgence in cases and in expediting vaccination. We have to be ready for the possible spillover risk resulting from differentiated and divergent recoveries. We need robust institutions and sustained policy discipline to see us through this COVID fog. Moving forward, the BSP will continue to promote price and financial stability. On monetary policy, the BSP will remain vigilant over the current inflation dynamics to ensure that the monetary policy stance continues to support economic recovery to the extent that the inflation outlook would allow. We will carefully scan the economic landscape with a forward-looking perspective to move in preemptively to address any risk to our price stability mandate. On the financial sector, the BSP will intensify its monitoring and surveillance over its supervised institutions to ensure that they remain responsive to emerging risk and to promote the continued soundness, stability, resilience, and inclusivity of the banking system, particularly through the pursuit of enhanced digitalization. Third, on the external sector, the BSP will support policies that will help build the economy's resilience to external shocks, including that of maintaining a market-determined exchange rate, keeping a comfortable level of reserves, and keeping the country's external debt manageable. Finally, allow me to end my presentation with 3 key points. Recent assessment by the IMF indicates that the world economy is improving in 2021. Greater vaccine deployment and sustained fiscal policy support are expected to lend support to this prospect for the year. However, recovery is divergent with significant downside risk. Greater scarring may be seen among the emerging and developing economies. Second, the Philippines is expected to recover in 2021, and recent economic indicators support this. Third, positive economic outlook for the country requires strong institutions and policy discipline. The BSP contributes by remaining committed to its mandates. The BSP also supports the national government with its inclusive growth goal. Thank you very much.